Welcome in this video. Xcn coin is the direction up from here. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand. When we take a broad look at the chart, one of the first structures that stands out is a clearly defined and resilient descending trend line that the price has been trapped under for an extended period. This downtrend has been tested multiple times in the past. Each time the price approached this line, it attempted to break upward, but was met with selling pressure and pulled back. This clearly illustrates how strong a resistance this line has become and how persistent the selling pressure in the market can be. Investors treat this trend line almost like a psychological barrier, assuming the price won't break through and concentrating their sell orders around that area. However, like any strong resistance, this descending trend line cannot hold forever. Over time, as the price makes more contact with the line, the selling pressure tends to weaken slightly with each test, as sellers begin to lose strength, while buyers, patient and opportunistic, start building positions. At this point, breaking through the descending trend becomes more than just a technical event. It also represents a psychological shift. If this unbreakable trend line is finally breached to the upside, market sentiment can shift rapidly, with many participants thinking, this downtrend might finally be over, prompting a wave of new buyers to enter. Such breakouts are usually sharp and come with strong volume. That's because many investors have pre-identified this level and are prepared to buy as soon as it breaks. Therefore, the moment of the breakout is significant not only from a technical analysis perspective, but also in terms of volume. Breaking through this descending trend line can result in not just a small upward move, but a powerful rally that signals the beginning of a new trend. However, for the breakout to be sustainable, the initial move alone is not enough. In many cases, the price will return to the broken trend line in a retest move. This means the price revisits the former resistance to confirm it now holds as support. If the price bounces upward from this retest, the breakout is then considered technically confirmed, and a much more robust upward trend can begin. In light of all this analysis, the descending trend line still maintains its critical significance. The timing and manner in which the price breaks through this trend will likely play a key role in determining the next direction of the market. If this strong resistance line is broken to the upside, both technical indicators and investor psychology may shift positively, paving the way for a new bullish phase. Therefore, this trend line is not just a chart element, it's a signal flare for opportunity and change. But of course, relying solely on trend lines isn't enough. Other metrics must also be considered. Stay tuned. When we closely examine the chart, we can observe that a clearly defined W pattern is nearing completion. This pattern, often referred to as a double bottom in technical analysis, typically signals the potential end of a prolonged downtrend or the growing strength of buyers in the market. Looking at current price movements, it is evident that we are at the second bottom of the formation, which is a highly critical threshold. The first bottom marked a low point during the previous market decline, followed by a rebound that created the middle peak of the W pattern. However, this upward move wasn't sustained, and the price fell again to form a second bottom. At this point, the second low, the market's reaction is extremely important. This area usually aligns with the first bottom, and buyers often step in again to push the price upward. If this support zone holds and the price responds with a rebound, the W formation begins to complete, signaling a potential strong trend reversal. Furthermore, these double bottom formations are often accompanied by supporting volume behavior. An increase in volume during the second bottom suggests that buyers are gaining strength and that any resulting rally may have more conviction. If the price breaks above the middle peak of the W with strong volume, the pattern is considered confirmed. This is viewed as a significant bullish signal in technical analysis. The target of the pattern is generally calculated by taking the distance between the middle peak and the bottom of the W and projecting it upward from the breakout point. This means the pattern carries not just short-term bounce potential, but also the possibility of a broader price advance. When such patterns play out in the market, they provide traders with both confidence and a clearer technical outlook. Being at the second bottom of the formation right now may also present a favorable risk-reward scenario. Since this area is a potential reversal point, a stop loss can be clearly defined, while the upside potential is substantial. Of course, the market's reaction here will offer important signals as to whether the pattern will play out. In conclusion, being at the second dip stage of this W formation represents a technically critical and closely monitored phase. If the pattern completes as expected, a strong market recovery and bullish momentum are likely to follow. For investors, such formations can offer major opportunities to establish strategic positions. MACD is one of the most reliable indicators used in technical analysis to measure price momentum and identify potential trend reversals. The core structure of this indicator consists of two different moving averages, the MACD line and the signal line. Additionally, the histogram visually represents the difference between these two lines, helping us better understand the strength and direction of momentum. Looking at the current chart setup, we can see that the MACD line is approaching the signal line from below. This scenario, as has been the case many times in the past, may signal a potential bullish crossover. In technical analysis, this type of crossover is typically interpreted as a buy signal, indicating that the downtrend may be coming to an end and an upward move could be starting. What's particularly important here is where this potential crossover occurs. If it happens below the zero line, it is often considered an early warning and could indicate the beginning of a new uptrend. However, a more powerful signal occurs when the crossover takes place near or above the zero line, as this shows that momentum is increasing and the uptrend may be forming on a stronger foundation. Based on the current price structure, the MACD line is gradually curling upward, and the distance between the MACD and signal lines is narrowing. Such convergences often precede a significant market move. This type of MACD crossover is even more effective if it's supported by rising volume, since volume confirmation is a key factor in increasing the reliability of any technical signal. Additionally, when we examine the MACD histogram, we notice that the bars have been shrinking and moving closer to the zero line. This suggests that the current bearish momentum is weakening and that the market is entering a phase of indecision. In such cases, investor sentiment becomes mixed. Some expect continued decline, while others anticipate a reversal. However, technical analysis offers an objective perspective. If the MACD line crosses above the signal line, it clearly indicates a shift in trend to the upside. Another strength of MACD is its ability to analyze trends across both short-term and long-term timeframes. The current potential bullish crossover may not just signal a short-term bounce. If the price begins to form higher highs and higher lows after the crossover, it could confirm the start of a medium-term uptrend as well. MACD has also historically provided a high success rate with its signals. Prior to many major market moves, a clear MACD crossover occurred, followed by a decisive price direction. If the current potential crossover materializes, there is a strong likelihood of a new upward movement starting, as seen in past patterns. Another notable point is that the current market structure appears to be in a consolidation phase. Prices moving sideways within a narrow range are often interpreted as the calm before a major move. In such flat markets, bullish MACD crossovers frequently occur right before breakout rallies. In this context, the MACD crossover could act as a kind of ignition fuse for the next leg up. In summary, the current MACD setup and the approaching potential crossover represent a situation that investors should closely monitor. If this crossover occurs, it's highly likely that long positions will increase and price momentum will shift upward. Therefore, this technical development should not be viewed merely as a crossover, but as a strong indication of possible market direction. Of course, considering fundamental analysis, news flow, and other technical structures alongside this signal is key to making more informed decisions. If we continuously monitor the MACD indicator, we won't miss these crossovers. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.